Good day and welcome back to Anand Rathi weekly podcast, Fundamental Cover Budhwar. I am Narendra Solanki. Dear investors, after unsuccessful bounce back in December, the markets have attempted another bounce back in initial days of January, but has now failed and broken the lows of November 24 as well, and is down by almost 3% from its 200-day moving average. The stocks, on the other hand, has witnessed tremendous sell-offs, especially in mid and small cap segment. The sell-off is largely driven by sustained unwinding of positions by FIIs. Also, the recent release of economic data impacted sentiments as growth shows some signs of losing momentum, while inflation remains relatively stubborn amongst the global backdrop of US looking to pause rate cuts, briefly impacting USD INR stability. Coming to the domestic macro, India's WPI quickened to 2.4% in December 24, which was up from 1.9% a month ago, chiefly on account of the rise in prices of non-food articles and textiles. Inflation in primary articles increased a mere 50 bips in December 24 to 6%, which is up from 5.5% a month ago, due to the rising non-food prices after being in the deflationary zone for the month prior. Inflation in manufactured products continued gradually rising in December 24 by 10 pips to 2.1%. This elevated inflation in food products at 9.7 and in textile 2.47 contributed to this upswing. While the WPI in the last few months has been favorable, we expect to see a modest uptick in the coming months. We are currently into result season, and so far the results have been within the expectations for the IT sector. And still, it's too early to comment on the trajectory of the results. Having said that, we believe the markets have discounted lackluster results and no significant improvement seen over the Q2, as was being expected a fortnight ago. On the global front, the markets have largely stabilized post after US election results and geopolitical uncertainty. However, the risk of volatility continues to remain high in January as new admin in US is expected to take charge later this month. The geopolitical situation continues to remain volatile and expect uncertainties up until the January. Now, coming to the upcoming week for economic data, today US CPI data is scheduled, US crude oil inventories data is scheduled. Tomorrow, China GDP data, UK GDP data, German CPI, and US jobless claims data is scheduled. On Friday, European Union CPI data is scheduled. Now, coming to the sector leadership on relative strength basis, sector likely to lead are IT, banks, financial, PSU banks, and realty. Sectors looking improvements are auto and infra. Sectors likely to show weaknesses are FMCG, consumer, energy, and pharma. So that's it from our side. Meet you same day next week. Happy investing. Thank you.
Investment in securities market are subject to market risk. Read all the disclaimer documents carefully. The above data is from our research report coverage.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.